March. Gold and silver obviously been in the news a lot with the reaction to the Russian invasion of the Ukraine. Gold was seen as a safe haven. So let's have a look at where we are with it now. This is the gold a monthly chart actually. Really going to take a long term view of it. So gold from the end of 1999 or 2001 really absolutely rocketed. Of course, I went up to in 2011. It looks like we were up at around 1911, and then we dropped. The key now really is that you can see we're very much in a longer term trend. Not sure what my charts are doing there. And as I zoom in to somewhere which is probably a little bit more relevant, this is what's key, and I've obviously pointed this out to you already. This double top is what concerns me now. It's a significantly sized double top, and when you look at the monthly chart, look. I know the month isn't over yet for March, but at the moment we're almost unchanged on the month. 3 weeks into the month, with this very, very long upper wick showing how the market rocketed and then ran into a wall of selling, which sent the price right back down to where we started the month, which is pretty much, I suppose, around the time of the invasion of the Ukraine. So gold really not particularly affected as we look at it now by the war. Straight up, straight down. And the problem is this leaves a potential massive double top. We retested the previous high. We got to within $3 of the previous high from 2020, 2 years ago or a year and a half ago, and absolutely collapsed. Now, the big worry here is, as I say, a massive double top pattern, which really would sink gold very significantly. We would have to break below 1700. That's the sort of neckline to the double top. So most patterns, I'll say to you, wait until the pattern completes, because you don't have your sell signal, for example, in a double top or whatever, or a head and shoulders, until the pattern has completed. But with double tops, I'm a lot keener to short before the pattern is complete, because this really clearly is a double top. We've definitely got confirmation on the weekly chart, and it's looking like we're going to get confirmation on the monthly chart if we hang around here till the end of the month, which is another 10 days. Anyway, you've got my fib levels on there. You can see we're trading around 1925, which is a good fib level. Down below there, we can get to 1835, 1830. These are obviously longer term levels. These are not the levels I'm posting on my daily analysis, because they would be way too far apart. I just wanted to show you that on the monthly chart, though, just how serious that potential double top sell signal is. Now, when we go to the weekly chart, again, as I said it was confirmed on the weekly chart, because for me, this shooting star candle, small body, long upper wick, certainly is a negative candle, indicating that the sellers are in. We've now had that followed up with a big red-bodied candle, which is exactly what you want to see if you think that this double top pattern is in. Now, in the short term, say short term, not really short term, because we're looking at the weekly chart, and we're looking at a trend line that goes all the way back to sort of mid-2019. So this is an almost 3-year trend line, pretty important, and it's holding. This is sort of 1900, 1890, which is why I've got that level as my main support for this week in the report, which I've written and sent out to you already. That's why I've got that level, and it certainly held on Friday, 1894. So I actually had 1893, 1890 as my big support level last week, and it bounced a point above that. But I'm just revising that down a little bit just to encompass that major trend line on the weekly chart. Now, what else can I say about that? Nothing really. We are overbought on the weekly chart on the stochastic, so that's a negative as well. So I think the gains are going to be limited. I think that the outlook for gold is quite negative. I mean, if we can't hold on to gains like that as the war clearly gets a lot worse in the Ukraine, then and inflation is through the roof, commodity prices through the roof, oil's through the roof. If gold cannot sustain those gains in that sort of fundamental environment, I really can't see how gold is going to recover. We have arguably a head and shoulders pattern here. Now, I'm not sure about this, because the head and shoulders pattern to me looks probably too big when put into context with the bull run. This head and shoulders pattern really is half of the bull run, as you see, because the right shoulder actually starts at the 50% fib. So I'm not convinced it is a relevant head and shoulders pattern. But anyway, I want to point it out because you may think it is. Break below 1900 or certainly 1890 would break the neckline to that and send us lower. So that kind of does work within the context of what I'm looking at anyway, with the double top, the potential head and shoulders pattern, and obviously the break of that 3.5 year or 3.25 year trend line. All of that would send gold down lower again. So I think you get my point. Doesn't look particularly positive. What changes that? Well, if we rally up to sort of 1975, 1980, that will also be a strong resistance level. Previous swing high peak up there around, where am I going to get this from? Come on, give me that number. Give me that number. 1974. So 1975, 1980, let's call it. That's a big big resistance level. Trend line, Fibonacci level. We would have to really get up through there for me to start being bullish about gold again. But then we've still got that double top. So that just gives you a sort of longer term outlook for gold. And as you can understand, I'm feeling pretty negative about that. Let's just have a look at silver, see what that's saying, see maybe if that's a little bit more positive. So we've got the weekly chart and the daily chart. The weekly chart really isn't saying a lot to me. It's been very much sideways action, as you can see. You know, this. I did have some hopes for silver. The break above this trend line, the trend line going back a year, for me looked pretty good. But silver managed to break the trend line when we're on the invasion, and then we've just sunk back to the trend line, maybe even a bit below it. So on the weekly chart, not really looking that positive. Okay, we are holding above all the moving averages that I like to look at on the weekly chart. I guess I could call that a positive, but we are overbought in the stochastic. And gold and silver obviously got absolutely nowhere near the previous peak, so not even a chance to form a double top. So really not very positive for silver. In the short term, this whole run up from February to March, well, that upper trend line has now been broken. We even retested it for a sell opportunity and reversed. So this to me just looks like a classic sort of a run up, a break, and now we move down. I guess we've got some support around sort of 2400, which I've actually put on today's trade ideas sheet. That would be the support level down there, but overall gold, silver not really looking that important. Now, while we're on the subject of not important, not that strong, while we're on the subject of commodities, let's have a look at crude, because I have talked about how that has been significantly higher. I'm actually looking at the April contract, which I need to update to the May contract, but it'll give us a good outline anyway. We're rolling over to May now. Where are we? So let's look at this. Okay, a good bounce off this support level. I talked about 93.5 being a really good support level because basically oil collapsed back to where it was before it rallied before the invasion. So this is where the invasion was taking place and the market took off. And we rallied up $45, went up almost 50% and just collapsed straight back to where we started. So for that reason, I thought that 93.5 would be a good support level, and that worked. There's obviously some trendline support there as well, so that worked. If you did buy in there last week, well done. We got a little bit of a run up on the Wednesday, big run up on the Thursday. The gain has been sustained on the Friday. So oil for me is looking a little bit more positive. That dump has certainly unwound the overbought situation, and now gold is actually oversold. Oil is now oversold on the daily chart. So maybe oil can run up a little bit. This certainly looks a bit more positive than gold, put it that way. I keep saying oil instead of gold. Okay, so I'm going to leave the commodities there really. I could show you a short-term chart, I suppose. It doesn't really offer much clarification, but there's the hourly chart here. Let me move that along a little bit further. There we go. Hourly chart for crude. So we do have some fib levels that are worth watching. They are holding quite well. Look, 102.30, 102.20, good support level. We've got the 500-hour moving average on that as well, which is one good reason why that seems to be holding. Not sure what's going on with that 200-hour moving average. That doesn't look right to me. We have to revise that. But anyway, it looks okay in oil, as I wrote in the report, as long as we hold above 102.50, 102.00. The rest of the levels are on today's report, so I'm not going to just run through them again. But I've got an overall more of a positive bias on oil than I do on gold. So I hope you find that useful. Please do like, share, subscribe, and any questions or comments, please do put them in the box. I will post today's gold, silver, and oil, the full report, in the description box, which hopefully will help you some more. And obviously, if you do want to subscribe, if you want these reports on a daily basis, please go to daytradeideas.co.uk.